In this video, I'm going to test a trading strategy to see if it works. And if not, can we turn it to a profitable one? Hey everyone, my name is David, and in this channel, I'll talk about trading, specifically Forex trading, and everything that I've seen in this industry for more than a decade. So you may find interesting stuff if you subscribe and join to this channel. In the previous video, I tested a popular trading strategy from a Forex forum called Forex Factory. Although the creator of the strategy had claimed he makes hundreds of pips per day, after testing it for 3 separate years, I found the strategy is not as he promised. It wasn't even profitable, and we lost money in all those 3 accounts. If you want to see that video, I put the link in the description below. You can also find a link there on how to backtest trading strategies manually. I decided to test another strategy, so I asked traders on Forex Factory to suggest some strategies. I received some suggestions, so I decided to test them one by one. The next trading strategy that I'm gonna test is another strategy from Forex Factory called Roadmap. The strategy is from a member called Laura T, and the thread was opened in 2020. Although it's a new thread, it's grown rapidly. That indicates people see something in it that makes them follow and participate in the thread. Well, that's a good sign. Maybe we can find a good free trading strategy in Forex forums. I started reading all the Laura's posts, both in the roadmap thread and another journal thread that she had opened to write the important parts of her strategy, summarize it, and mentioning some key points. The strategy is based on moving averages. And since I've studied a lot about the moving average indicator and made some strategies based off that, it didn't take long to figure out all parts of this strategy. In our whole roadmap system, there are 2 main types of strategy. One is based on waiting for a breakout in higher time frames and entering in lower time frames, and the other one is a pullback strategy in which you enter the market in a lower time frame when a pullback happens in a higher time frame. Although in fact it's a multi-time frame strategy, you don't necessarily need to change time frame to analyze. Indicators with higher periods play the role in this case. For example, there is a moving average with the period of 200 that its role is to show the direction or bias of the market in the higher time frames. Without further ado, let's become familiar with this strategy. The roadmap system has 2 main trading setups, as well as 4 side ones called advanced setups. In order to have more solid results, I decided to just go with the 2 main setups and only open positions when those 2 appear. Before seeing what those setups are, we need to know what tools or indicators are needed in this strategy. The first one is a simple moving average with the period of 200. It shows the direction of the market in higher time frames, and since we want to go with the trend in this strategy, we open the positions based on the bias of this moving average. The second tool is a channel made of 2 moving averages. One of them is an exponential moving average with the period of 8 applied to high, and the other one is the same EMA 8 but this time set for low. The next tool is another channel which is like the previous one but with the period of 55. The next one is a multi-time frame RSI that shows the momentum of the market. Another indicator that we use shows ADR or average daily range of a pair. There are 2 lines in this indicator, ADR high and ADR low, that act as support and resistance. So when the price gets to them, it either reverses or stops for a while and then continues its direction. There are 3 other lines in another indicator that act as support and resistance: the high, low, and open of the previous day. And finally, the last tool is a dashboard showing the SMA 200 in different time frames, so we can see what the direction of the market is in other time frames. You can download all those indicators in roadmap thread on Forex Factory. You might think it's very difficult to analyze the market with all those things, but actually it's not. It only takes a few minutes to find the setup and analyze it. So now let's see how we use them in this trading strategy. Breakup setup. Breakup setup or channel cross is where the EMA 8 channel breaks SMA 200 completely, and then the price gets back to the channel. We are going to enter the market somewhere in the middle of the channel if the multi-time frame RSI is above 50 for buy positions and below 50 for selling, and at least 2 of SMAs 200 on higher time frames are in the direction of our positions. You can find out about that on the multi-time frame dashboard. For take profit, there are some different options. We can use yesterday's high and low or ADR high and low. Or we can exit when the EMA 8 channel fully crosses the EMA 55 channel. We can also use a mixed method. For example, closing 50% of a position after the price reaches one of the mentioned supports or resistances, and keep the other 50% open until the EMA 8 crosses the EMA 55. Then close it. For a stop loss, we exit the market when the market proves us wrong by moving against us and breaking the SMA 200 again. Pullback setup. Pullback setup or channel failure is where the EMA 8 channel either hits the SMA 200 and reverses instantly, or breaks through the SMA 200 but fails to continue and pulls back. From now we handle the position just like breakup setup. Okay, now let's see how I backtested the strategy and what the results are. By the way, regarding money management, Laura uses 1% of her account for each trade. But for making the backtesting process easier, I used a fixed one lot for a 10K account. All the backtests are on EURUSD 5-minute chart with a 1 pivot spread, which is actually a little bit higher than average in the industry. If you want to see brokers with the lowest spreads, you can watch a video that I've made about them. The spreads of EURUSD on all of them is lower than 1 pip. You can see the link on the top right of this video now, or find it in the description. For the first attempt, I decided to open positions exactly as it's been instructed by the strategy, and I set a 2-step take profit. Regarding to stop loss, we close our positions when the market goes against our positions and breaks the SMA 200, or if there is a gaping distance between our entries and the SMA 200. We close positions when the price fully breaks the EMA 55 channel. I backtested it for February 2020 and traded 70 positions during that period. Well, it didn't go well, and the account suffered a loss of around 13%. I noticed that my average loss is almost twice as big as my average win, so I decided to reduce the size of stop losses. Instead of waiting for the EMA channel to either break the SMA 200 or EMA 55, I'll exit when the price goes against the positions and breaks the other side of EMA 8 channel. This method makes the losses a lot tighter. However, I will probably get more stops. I also decided to open the second position when the market goes in my favor and still have a good momentum. Large candles in trends and small or weak candles in reversals. I tested the strategy within the same time period, but with the new changes. Well, it made the result a little bit better, and the loss cut in half, but we didn't make any profit. This time I traded 136 positions and we lost around 7% of the account. 7% loss is not a lot, and since I know the nature of moving averages as well as trend following systems, I had an idea. First off, since this strategy is a trend follower and most of long trends start with a very fast move, we can't catch some of them in this strategy. because we need to wait until the price enters the EMA8 channel. So I decided to open the positions as soon as the price gets to the channel. In other words, when the price hits the higher line in an uptrend and the lower line in a downtrend. That way we enter the market a little bit sooner, but we get to catch more trends, especially some large ones. The second thing that is vital for a trend follower is not to be stuck in a ranging market. Well, the RSI indicator in this strategy can find some of those traps, but not a lot of them. The market can range around SMA 200 for a long time, and if you enter any position, it's gonna be a loss. So what can we do about that? Well, I decided to enter positions only when the market has a good momentum in my direction. How am I gonna detect that? After I see the price ranging around SMA 200, I don't enter the market until the price runs away from the SMA 200 very fast, which normally makes large candles. I also decided to open positions when the price gets to the EMA 55 if the higher time frames, in this case 1 hour, 4 hour and daily, show the same direction. I backtested the strategy within the same time period again, and guess what? Please drum roll. That actually worked. I traded 129 positions and the account grew around 8%. That might seem small for some newbies that just come across trading and watch some 100 to millions videos. But if you've been around trading for some time, you know 8% per month is something that 99% of traders can't see in long terms. Anyway, 8% per month makes you one of the few profitable retail traders in the world. Now I can say this strategy can be a profitable one if it's executed well. And one more tip, I tried this strategy on Euro USD, which has a medium average daily range and is not too volatile. Trading pairs that are more volatile have larger daily range and make larger trends, so they are better for this strategy. I have made a video about average daily range of forex pairs. You can watch that video to pick more profitable pairs for this strategy. I'll put the link in the description below. I'm gonna keep testing more strategies, so if you wanna see those strategies too, make sure to subscribe to this channel and hit the notification bell. And of course, like this video if you found it useful.